Okay, so the Hodl model.
Yeah, that's I think it's an interesting topic to get into.
Yeah.
We can also talk a bit more about the differences between stock to flow. To give kind of an introduction to what the Hodl model is about, we first look at a chart where I plotted the circulating supply. So we basically go from all the way back 2009 to today, which we have today 19 million coins in circulation. And so you can see just the supply issuance of Bitcoin. And in that, you can see the illiquid supply. So that is colored in blue. We can actually see the amount of coins that are relatively illiquid. Now, maybe I should define what a liquid supply is. It's useful, and that's, again, the strength kind of on-chain, is that we can classify Bitcoin supply, we can put them in different buckets. So we can, with supply, we can look at, for example, the age of coins. So we can say, oh, this is supply that belongs to short-term holders or to long-term holders. That's one useful way of looking at it. Another classification is to look at it in terms of spending behavior. And that's actually what illiquid supply does. So you can divide supply into highly liquid, and illiquid supply. And in this case, what does that mean? So if I stack Bitcoin, imagine I DCA into some hardware wallet, and if I spend less than 25% of that Bitcoin which I'm stacking, then I'm an relatively illiquid entity. So that's what illiquid supply means. So you can still spend some of that, but it's just that the majority of you will hold. So you're a hodler. And if you spend more than 25%, you get into like the liquid or highly liquid bucket. And so why is this useful? Because it's kind of like a proxy for hodling behavior, right? There's different ways to look at hodling behavior. Also, long-term holder supply is another one, which we look more at the age of coins. But here we look at spending behavior. And so the interesting thing and the trend that you can see is that obviously Bitcoin has its own supply issuance schedule. And in like pre-halving one, so when the block reward was 50 Bitcoin per block, we had about 7,500 Bitcoin per day that were added, and illiquid supply grew with about, let's round these numbers, 6,000 Bitcoin per day, more or less. Now, after the halving, obviously, the block reward halved into 25 Bitcoin per block or per 10 minutes. And that resulted in more or less an average about 4,000 Bitcoin per day. Now, the illiquid supply grew then with 2,500 a day, more or less. So the supply issuance was actually always outpacing, the illiquid supply growth. And that's because obviously, like most of the supply of Bitcoin has been, added in the last, 13 years. And so we're actually now already at what is it, 90% or so of all supply. 19 million of the 21 have been issued. So, the next 2 million will be issued over the next 100 years, so in the second halving, then the supply issuance was still outpacing, illiquid supply growth. And so we then had 2,000 Bitcoin a day on average in new supply entering Bitcoin, but we only had about 1,000 Bitcoin per day, with illiquid supply growing. And the special thing about this halving is that we've started to outpace. Yeah. So
this is the real flippening.
This is the real flippening. Yeah. This is a trend reversal. And so we now have been adding, 900 Bitcoin a day, more or less, but the illiquid supply has been growing by double that, right? So that's a very interesting trend reversal. And, I think it's kind of an underrated trend reversal. It's not been talked about much.
Well, listen, if you're listening to this, you definitely need to go onto the YouTube and check this out and see this chart, because what you're seeing is you're starting to see the gap between the two get closer. And that's going to create the market. If that continues that over the next halving, that's going to create the market condition. Because what's going to happen is you can see the chart. The liquid supply should continue to grow, but the circulating supply is going to start to level out.
Exactly.
So that
So
interesting.
the gap will get, it will, illiquid supply will keep outpacing circulating supply, because eventually this was doomed to happen, right? Because
of course,
circulating supply is like halving every halving. So it is. It's obvious that also with Bitcoin being a store of value, which means that most of the Bitcoin will be hodled, will be held in cold storage. So it's kind of obvious that liquid supply will keep on growing with the store of value narrative. And so maybe then to get to the next chart. So what does the Hodl model do? So in the Hodl model actually tries to model the growth of a liquid supply. And so it's a log growth curve, and it actually has a high R² value of 98. But so you can see with the Hodl model that and I call it the inflection point, is that so if we keep on this trend, then we make, and in the bottom in the bottom chart of these two charts, which are shown here, you can actually see illiquid supply as a percentage of the total supply. So you can see that we started out as more or less 100% illiquid, because when supply got added, nothing got spent in the beginning, so it started out as 100%. Then it started dropping, but we made a low of illiquid supply around 70%, and since that we've been rising. So illiquid supply has been rising, and so that looks very bullish for the future of Bitcoin, because that is actually what Bitcoin scarcity, what the digital scarcity is about.
What's the dotted line on this chart?
So the dotted line is the Hodl model.
Oh, okay.
Yeah. So also in the bottom chart, that is actually the Hodl model mapped onto another perspective, which is the illiquid supply as a percentage of the supply. And you can see that there, the Hodl model makes this low in the inflection point, because that is where the trend reversal is starting to happen. So Bitcoin actually was getting, so another way to look at it is, and maybe we can go then to the next chart, is the available supply for trade. So if we look at, so this is, instead of the illiquid supply, we're looking now at the liquid supply. So the actual supply that's available for trade.
Does that mean for trade generally, or that's on exchange being traded?
Yeah, that's just, I mean, we look at the blockchain, right? So all Bitcoin that is kind of seen as liquid, so which is like moving a lot, we can look at that. So that's kind of, you can see it, you can look at that and say, this is liquid Bitcoin. So this Bitcoin is kind of available for trading and for buying and for selling. And so if we
does
look,
that assume that like any Bitcoin transaction is like for a trade transaction, like going to an exchange?
Yeah. So, I mean,
that's a really good, let me just add to that. See if Danny's think about it in the same way. Do you consider Bitcoin that is liquid because it's being spent as also available for trade? And therefore, is every purchase really a trade? Like if someone goes onto my website and buys a Real Bedford jersey with Bitcoin, do you consider that a trade?
Or would that be part of the liquid supply?
No, that would then become part of the liquid supply, depending on the spending behavior of that person. Now imagine I'm stacking sats like all the time. I'm DCAing, but I love, Real Bedford FC, and I want that shirt, So I decide I go.
Do you?
I do.
Have you got it?
Yeah, not yet.
You need to increase that liquid supply.
Yeah. So I can buy. So if I buy a T-shirt and online, and I spend a little bit of that Bitcoin, but if it's less than 25% of my total stack, then I'm still considered illiquid, so that doesn't change. But it looks in general at the spending behavior. Now, if I'm an entity that spends a lot, I'm constantly trading, that is seen as a liquid entity. So
I see. So if there's a big stack there, you see a wallet address with a bunch of Bitcoin in it, and I just buy one jersey, that whole stack you could consider illiquid.
Yep.
But if I'm a trader with that big stack and I'm trading lots, at any point I might trade that.
Exactly.
Okay, that's interesting. Yeah. But that is a point though. Like I'd never thought of it like that. Every time you purchase something with Bitcoin, you're making a trade. Mm-hmm. You're making a trade between holding that Bitcoin and spending it. It's the same, if you spend it on a jersey, which is priced in pounds, because we do price them in pounds, that's no different to going on an exchange and selling Bitcoin.
Exactly. Yeah. Well, on Bitcoin on an exchange often is not seen on chain, right?
Yeah.
Because
Well,
they
yeah,
are,
okay.
you know,
That's how you classify which is okay. I see.
but we do know we can differentiate between Bitcoin on exchanges. You know, we know most of the exchange addresses, and we can kind of see.
So this Hodl model, this part of the chart, the available supply as a percentage of total supply, is kind of telling you the same thing, though, right?
It's kind of the opposite. Instead of looking at the illiquid supply, we're now actually looking at the liquid supply and the high. Yeah, so there's liquid and highly liquid, but here I combined them. I call them available supply. So practically, it's not a perfect representation of what is happening, right? It's like we try to estimate, you know, but it shows interesting data, right?
But there's common sense logic to it as well.
Yeah.
Yeah.
And so here you can see in the 2013 cycle, which it kind of starts, we can see that the available supply for trade was around 20%. You know, it started more or less around 20% of the total supply. So in this chart, I account for growth of market cap, right? So that's why we look at it in percentages. But if we look at the second halving, so the catalyst basically for the 2017 cycle, we start out around 25% of the supply being available for trade, right? And so obviously it goes down when we go into the bull market because some of that supply gets captured. And then you can see that in the bear market, again, it rises, you know, in the 2008, 18, 19 bear market, it rises heavily actually. And so at the third halving, we start at 28% of the supply being kind of available for trade. And then we go into the last bull market that we had and we start going down.
This is a significant drop.
Yeah, it's really a significant drop. Yeah. And so, but only the hype in the market was only on the first part of the drop. But the second part of the drop, and that's kind of part of this trend reversal, as I was saying, like since the third halving, something changed. What did change? Well, the halving caused that the supply issuance, got lower, and so the liquid supply growth has been faster, and that's why the available supply has slowly been like going down. You know, that's the transversal. So that's what the Hodl model tries to map, and so this is kind of very
bullish,
very bullish for the next cycle, very promising, because what if we start the next halving again around let's say at the current we're currently
go back a chart, Danny, maybe two charts. Yeah, go back one more. Okay, so even if it was the average, that's the average circulating supply will be 450-ish. The average increase per day.
Yeah, after the fourth halving.
But if the average liquid supply goes up.
Yeah, imagine it's just
stays the same.
Stabilized. Let's just say it's kind of stabilized and it just stays around the same level currently. Even then, it will just continue to, Bitcoin will get more scarce.
Yeah. But if it goes up as well, you've got compounding effects.
Yeah.
Danny, we're going to need more Bitcoin. Fuck.
So here, this is people selling the bottom in 2018, right?
Yeah.
That was you, right, Danny?
Yeah. No, I did all right in that time. But then we've not had anyone selling the bottom this cycle.
Yeah.
Why?
We had. It's just that the trend reversal, which is what I tried to explain in the first chart. So there is this trend reversal because supply issuance halves every cycle, every halving. So at some pace, at some time, illiquid supply is going to outpace supply issuance, and that is, in my opinion, what happened in the third halving, and that's therefore available supply has been going down just because of this trend reversal.